No matter how many times they try to beat the market down, it just gets right back up and rallies again. Welcome back to Trades and Trends. I'm your host, Kyle. Today is the last day of September 2024, and I thought September was supposed to be an underperformer. I thought we were supposed to see a lot of red, and that did not end up happening this year. It's amazing how many things that are supposed to happen and things that the market is supposed to be doing don't always end up coming true, and in fact end up just hurting more people than they end up helping. So Jerome Powell actually had a few things to say today. He said that the U.S. economy seems poised for a continued slowdown in inflation and will allow the Federal Reserve to cut its benchmark interest rate and over time reach a level that is no longer holding back economic activity and growth. He also said that the Fed is not on any preset course, that the risks are two-sided, and that they will continue to make their decisions meeting by meeting. So we're looking at a very dynamic, evolving interest environment going forward, where we should be expecting a few more cuts coming up here. He said that we should see a total of 50 basis point cuts throughout the rest of 2024. And so that's where my assumptions, or at least my guesses around, we will probably be seeing a quarter point percentage cut at each of the following two more meetings for the rest of the year here. And then there's some evaluation that will have to take place at these next two meetings to determine how much will be going on throughout early 2025. Maybe the Fed will be looking to slow down just a little bit after the moves that they've been making just recently and throughout the rest of the year before they can definitively say on what they want to be doing or expect to be doing throughout the first quarter of 2025. Now, of course, he did add on that this is all contingent on if the economy continues to perform as expected. The Fed could cut faster if needed or slower. I think that's where they will be wanting to be as open and transparent as possible, because if the Fed starts making moves that aren't being expected or aren't kind of figured into the equation, that's where we're going to start to see a lot of uncertainty. And with that volatility, they will need to remain very transparent going forward and continue to, at the best of their ability, make sure that everybody's kind of on board and on pace with how quickly they're making changes and the direction in which they're going with them. Now, at first, the market did not react very positively to this. The S&P 500 started sliding red for the day and was down over half a percentage point. But it was not until mainstream media really started to jump on the back of the Fed that suddenly traders just 180'd and took it right back near all-time highs. So much for the market having a negative reaction to what Powell had come out and was talking about. We seem to be right up near all-time highs again. From the lows, we rallied about 1.2%. It sounds like some market participants were expecting at least one more 0.5% rate cut before the end of the year. Not 0.5% in total, but another 0.5% cut at an upcoming meeting. I think we have to remain a little bit conservative with our expectations here of how quickly the Fed is going to cut. While they did start off a little bit strong with a half a percentage cut right out the gate in pivoting and changing their stance on where they feel like their handle of inflation is going and how well they're controlling that. That certainly doesn't mean that we're going right back down to 0 or 0.25% interest rates overall. So this will still be a continued fight. It'll be something that the Fed has to, of course, continue to monitor, because now that we've made the cut that we've already made, and if we have two more 0.25% cuts coming up throughout the rest of 24, that's still a whole percentage point that we're looking at cutting interest rates in total in the matter of 4 months, 3.5, 4 months or so, which is no small amount. So the Fed will be treading lightly here. They're going to make sure that the cuts that they've already made and that they will be making aren't going to allow inflation to suddenly start ticking back upwards. That even in the name of protecting unemployment and protecting the job market, if inflation starts reeling back upwards, it's going to be a tricky position for the Fed overall. That is how we're starting the week off. The monthly rotation is here, so we might see a little bit of volatility going into tomorrow as well, being the 1st of October. Keep in mind, earnings season is right around the corner as well, so we may start to see some more individual volatility fluxes within individual stocks. Thank you so much for watching. Please consider liking and subscribing. I will see you all again very soon.